Hey guys, and welcome to the Working Money Channel. Boy, do I have a show for you today, guys. So this just happened yesterday, and it is creating, pardon the pun, a ripple effect through the crypto market specifically. Some are, assuming that this contagion could hit the banking sector, and, in some capacities it already has been. So I'm just going to jump right in. Silicon Valley Bank has collapsed, and it is the second biggest in U.S. history. So this coming from the ISO GOAT here. Number two, followed only by Washington Mutual Bank in 2008. Silicon Valley Bank, actually, if I just escape here, you can see the image a little better. Silicon Valley Bank, number two. And as you guys can see, this dwarfs all these other closings that we've seen over the last several decades. So Silicon Valley Bank has collapsed, and you guys can see, you probably noticed it more yesterday, but markets were kind of in a free fall. This is Bitcoin on the daily. Right now, Bitcoin has recovered a little bit, trading at 20,200 per coin. Let me throw that on the 1 hour for you guys. Just to kind of demonstrate what we have been seeing now. So the Silvergate incident brought markets down last week. We did see after the dust settled, markets rallying a little bit here. And then we got banged with the Silicon Valley Bank news, bringing Bitcoin price back down. It did reach a high of about 20,700, 20,800, and then came right back down under $20,000 per coin. So we are recovering a little bit. Wall Street Silver here posting this. The banking sector is feeling the pain. Four largest banks lost a collective $47 billion in valuation, guys. And this just happened over yesterday. Citigroup, JP Morgan Chase, Wells Fargo, and Bank of America. Take a look at those sharp price declines. So this is, I gotta say, a bit of a dual tool for the powers that be. I didn't realize that would rhyme that way, but a dual tool in that, look, they're collapsing the banking sector and at the same time affecting cryptocurrencies. Is it any surprise that Jim Cramer just a month ago was insisting that you buy Silicon Valley stock? This from me and Vince here. CNBC's Jim Cramer urged viewers to buy Silicon Valley Bank stock last month. I'm not making this up. CNBC analyst Jim Cramer is once again being pilloried on social media after a clip resurfaced showing the Mad Money host recommending viewers to buy shares of Silicon Valley Bank. Well, you know what? I'm just going to play you guys the clip.
The ninth best performer year to date is SVB Financial. Don't yawn. This company's a merchant bank with a deposit base that Wall Street had been mistakenly concerned about. SVB is the old Silicon Valley Bank. Recently bought one of our favorite research firms, Nathanson, and it's become less dependent upon private equity and venture capitalist offerings. Wait a second. Those dried up last year. They could come back. Yeah, some of them come back here, but the stock directly affects an oversold position. Stock was the fourth worst performer in 2022. I think the fears were not justified, and it's a very compelling situation. Hey, by the way, long-term private equity and venture capital, they're not going away. Being the banker to these immense pools of capital has always been a very good business. Stock's still cheap. Now, you have to remember that a stock that falls 66%, like SVB Financial did last year, it takes it a lot more to recover. After losing two-thirds of your value, you need a 200% gain to get back to even. This is arithmetic. Some people call it geometry. So you could argue SVB's nearly 40% rally this year is barely a drop in the bucket. And that's how I want you to think it. I think it's also a good example of why these bounce-back moves might be far from over. These stocks could have more room to run, especially if you think they were driven down to artificially low levels by tax loss selling, artificial dumping.
What a tool! And the inverse Cramer indicator continues to yield valued bets. So there it is, guys. Jim Cramer just last month, only 1 month ago, suggesting you should buy SVB or SIVB, which is the stock ticker. Let me just bring that up. You guys can see stock has crashed. This is it on the 1 hour. And if I just show you guys the weekly, so this all happened pretty much Thursday and Friday. The stock went down from about $316 per share all the way down to about $100 per share. So you can see that was a decline of roughly 62%. At its height, it was 64, 65%, but now it's trading 62% down off its highs in just a couple of days. So, what is next, guys? I mean, the crypto industry shaken by this too. David Schwartz posting this. Jim Cramer was advising people to invest in SIVB just 1 month ago. It was quite possibly the worst possible investments. So even David Schwartz is commenting on this. I guess this is probably another great opportunity to let you guys know that I do have an affiliate link in the description of every video to keep your cryptocurrency safe. I know that this didn't have to do anything directly linked to cryptocurrency, but SV Bank, Silicon Valley Bank, they are connected to the tech industry, and that does extend to cryptocurrencies. This is affecting crypto companies. USDC has been affected, and Ripple, well, we're going to get into that. So guys, I do have an affiliate link in the description. Just be careful. If you are looking for Ledger Nanos, I should bring this up too because I happen to see this. If you're looking for them, do not in any circumstance buy them used. They could be compromised. There was this scam going around where somebody bought a used Ledger Nano and they didn't know how to use it, and the thief put the seed phrase in the Ledger Nano box. So they were basically instructed to put their cryptocurrency on the Ledger Nano, but the seed phrase was already there. The thief sold them the Ledger Nano at a deep discount. As you can see in this example, this is one being sold on eBay in the same kind of context. And then what the thief did was, once the cryptocurrency was on the Ledger Nano, they used the seed phrase, they swindled the buyer, and they stole all his cryptocurrency. So guys, just be safe, be prudent. So now what's going to happen with Silicon Valley Bank? Genevieve Rochdechter posting this, a thread, Silicon Valley Bank just failed. Will the contagion spread across the financial system? So this is the bigger, I think, story here. How is this going to affect the rest of the financial sector? How is it going to affect cryptocurrency? So Wednesday, first of all, we got that Silvergate announcement that it was ceasing operations. Then Thursday, Silicon Valley Bank stock crashed 60% as the bank scrambled to shore up liquidity. Friday, SVB fails, taken over by the FDIC. It's been a horrible week for banks. Silicon Valley Bank just failed and FDIC is taking over. The bank attempted to raise capital and couldn't. Then they tried to sell to a larger bank and could not do that. Now SVB has failed and the FDIC will attempt to salvage customer assets. Is this just the tip of the iceberg though? And how intertwined are all these banks? So guys, this is part of the bigger question here. Many banks are facing the same problem. Their bond portfolios were locked in at low rates. As depositors withdraw money, banks may have to sell their bonds at huge losses to come up with the money. If too many customers withdraw at once, the bank's losses could be massive, and this is what causes a run on the banks, and I'm sure you guys know what that is at this point. Silicon Valley Bank's problems started with a $1.8 billion loss on the sale of its AFS, available for sale bond portfolio. Rumors swirled that SVB was facing huge interest rate risks on its $91 billion portfolio. This panic caused some customers to withdraw their money. It's unclear how much at this point. Withdrawals feed the vicious cycle of selling bonds at a loss to cover the outgoing deposits. SVB theoretically had the assets to cover deposits, which they are legally obliged to, but the real question was, how liquid are those assets? And so it turns out that we did, in fact, get an answer to that, and they can be liquidated without causing a massive loss. Turns out the answer to that last question was no. So they had to do a massive liquidation. This caused the collapse. This caused the tumble. Other banks are facing the same problems. Absolutely. Take First Republic Bank. Its stock was down as much as 50% today on similar fears, but has since recovered a little bit. But the word contagion doesn't necessarily apply to the issues with bond portfolios. This issue has little to do with its relationship with other banks. It would be a problem regardless of SVB's dealings with other banks. So just to give you guys a bit of a nutshell interpretation of what's going on with SVB, this goes on a lot longer. I will link it in the description of the video, but a lot of great stuff in this tweet thread from Genevieve. I do suggest you read this if you want to get some good insight on what is going on to the banking sector as a whole. I mean, heck, I could probably do a full video just on the banking sector. Brad Hargreaves here, also posting this with regards to the SVB story. Okay, SVB closure and receivership is going to have a massive impact on the tech ecosystem. SVB was not just a dominant player in tech, but was highly integrated in some non-traditional ways as well. A few things we'll see in the coming days and weeks. So, this is how the contagion could in fact spread. One, SVB was incredibly integrated into the lives of many founders, not just their startups and banks and lenders, but also provided personal mortgages and other financial services. A whole mess for FDIC or the eventual buyer to unwind. Down here, two. Any uninsured balances at SVB, those above $250,000, now guys, make note of this, this is really important, are in jeopardy. FDIC plans to pay them out as it sells the assets of SVB. Lots of startups exclusively bank with SVB, as this was a covenant of their debt. So think about this. The FDIC can only insure under, in this case, under $250,000. Think about all those startups. Think about all the millions and billions of dollars of money that flows through this bank. I think they said they had on their balance sheet $91 billion. Think about all that lost money. Think about if that does not get recovered. What is that going to mean for all the players involved? What is that going to mean for the tech sector? What is that going to mean for individuals? As you guys can see here, they also provided personal mortgages for people working in, I'm sure, the tech sector, maybe other sectors too. CEOs yesterday faced a hard choice. Pull your deposits and go into default on your venture debt, or risk losing everything if the bank failed. Many chose to hold tight, as SVB's outright failure seemed outlandish. Now, they may not be able to make payroll next week. Unpaid wages pierce the corporate veil, so boards are incredibly sensitive to employing workers they may not be able to pay. Expect mass layoffs later today, Monday at the latest. And given the weak fundraising environment, a number of startups have been reliant on venture lenders. So, for example, SVB not aggressively pursuing amortization of debt or triggering default for covenant footfalls. Example, cash balances. How will the FDIC handle this? Mass defaults. I mean, I would not want to be at the receiving end of this. I would not want this to be my headache. Having run a startup through the GFC, this is the first thing I've seen since that is even vaguely reminiscent of that time. A total cluster F. One more thing, SVB also offered wealth management services to many of its founders. So your corporate lender, corporate bank, personal mortgage lender, and family's wealth manager is, in fact, all in one bank, which is now in FDIC receivership. So Brad Hargreaves here, spelling it out, this contagion could, in fact, spread. We've got Ian Binns here, roughly 95. So just giving you guys some more statistics, 95% of Silicon Valley Bank's deposits were FDIC uninsured. So only 5%, in other words, can be recoverable by the FDIC insurance. As of December, roughly 95% of SVB's deposits were uninsured, or FDIC uninsured. Notably, also nearly half of the U.S. venture capital-backed startups were involved in Silicon Valley Bank. Per Bloomberg, 88% of Forbes's 2022 Next Billion startups are SVB clients. 44% of U.S. VC-backed per their own website. His list will be updated as more names come up. So just some more statistics here. Now, guys, here's where it gets scary and where we kind of cross over into crypto. Patrick L. Riley posting this. So if USDC depegging doesn't make you nervous, you've been around for a minute. If people thinking that means USDT is safe doesn't make you nervous, you are not paying attention. So how is this affecting crypto? And in particular, interestingly enough, the stablecoin USDC. Let's take a look at USDC here on the chart. And actually, I got to bring it up in conjunction with USD to show you guys that this is now depegging. And when we see a depegging of a stablecoin, that is never a good sign. So we've seen, steady movement in and around the $1 range. Obviously, this is a stablecoin pegged to the US dollar. But since yesterday, since this story broke, this is what has happened now to USDC. So, and I was waiting for this part of the video to tell you guys this. At first, I was saying a two-prong effect, attacking the crypto sector and attacking the banking sector to usher in the Great Reset. Well, could this be threefold now? The powers that be also attacking stablecoins, knowing full well that USDC or Circle had exposure to SVB. And so could this be the end of USDC? Let's keep digging here, okay? So we're seeing a depegging here. Coinbase also coming out. We are temporarily pausing USDC to USD conversions over the weekend while the banks are closed. During periods of heightened activity, conversions rely on USD transfers from the banks that clear during normal banking hours. When banks open up on Monday, we plan to recommence conversions. They continue on by saying down here, your assets remain safe and available for on-chain sends. But notice, guys, USDC conversions are being affected, and it's not just Coinbase. Dr. Martin Hisbach here also mentioned that he got an update from Uphold. I don't have the Uphold statement here. However, update from the Uphold engine room, service disruption for USDC. A new incident they are investigating following the developments on USDC. We're experiencing intermittent issues with USDC liquidity, and you may not be able to sell USDC. Also note, guys, watch your guru. Just in, Robinhood is suspending USDC trading and deposits. Well, David Schwartz also came out with this tweet asking Circle a quick question. Great quick question, though. Are you solvent? So this is with regards to a statement that Circle made yesterday as well. Silicon Valley Bank is one of 6 banking partners Circle uses for managing about 25%, guys, a 25% portion of USDC reserves held in cash. So, were the powers that be trying to checkmate us? Things that make you go, I mean, we know what government stance is on stablecoins, how they want to regulate them out of existence, essentially. And so a quarter of the portion that were in reserves held in cash were at SVB. While we await clarity on how the FDIC receivership of SVB will impact its depositors, Circle and USDC continue to operate normally. And so David Schwartz asking, but yeah, are you solvent? We still don't have an answer to that. Also, Mikkel here asking about Ripple's exposure. And this is really interesting as well. There were rumors circulating that Ripple was in fact exposed, that they were in fact in trouble. And so, the story isn't as clear as a black and white answer. In short, yes, Ripple was exposed. However, well, let me just explain to you. So unfortunately, my best guess is yes. Ashley Prosper down here saying, I don't think so, but some of their partners were in fact exposed to SVB or Silicon Valley Bank. London-based TransferGo Money wiring company, which was a Ripple partner since 2018, has spread the word about getting 5 million euros from SVB, the UK branch of Silicon Valley Bank, to develop a real-time payments platform. So there's just an example of one connection there. But even Ripple themselves have been exposed. This one from Michael Branch here. Ripple's Chief Technology Officer David Schwartz has said the blockchain payments firm would issue an official statement in response to inquiries over whether it had exposure to the collapsing Silicon Valley Bank. The Ripple executive tweeted today noting that he could only speak on the issue once the firm released an official statement. And so that was what David Schwartz wrote down here after asked by Shorter XBT. Does Ripple have any exposure? And David Schwartz did write down here, we're going to issue a statement. I can't really say anything until we do that officially. Tipsy Tiger asking, why would a statement take this long? I find it ironic that Ripple, a company focused in payment and settlement solutions for banks, etc., takes this long to issue a statement on its cash reserve exposure, if any, in one bank. When a statement takes this long, it's normally not good news. And guys, just for some context here, that was from 6 hours ago as of the time of this recording. I still don't think we have any official verdict from Ripple. At least I've been looking and I couldn't find one. Jeffrey XRP here saying, bro, I bet they kept their $1 billion in SVB. If that's the case, then holy crap, this really sucks. Believe me, I hope that's not the case because Ripple will need to bolster the cash reserves again. Then the next question is, where will they bank? Mr. Intuitive down here saying, you're on the table with central banks and kings and there's a chance you had money with a Fugazi bank. I doubt it. Maybe deposits for holiday parties. Jungling. Great. Quick question though. Are you solvent? Great question. So we're still waiting on a Ripple announcement. And how much exposure Ripple did have. Bill Morgan here, the only exposure of Ripple I have observed during the wreckage in crypto over the last 12 months was from leasing XRP to FTX. So this is confirmed, obviously, and it was what Bill noticed. Maybe something similar with SVB. The exposure, according to some articles, was XRP 10 million, which was about 1% of Ripple's liquid assets. So he just posts a statement with regards to that. He goes on to say down here, Ripple's fourth quarter 2022 market report discloses that there was an outstanding lease at the time of the sum of about 57.7 million XRP, which would be about 5.57% of Ripple's liquid assets. It does not look like a high risk for exposure. So again, speculation based on what we know about what Ripple, the kinds of business dealings that Ripple does have. Holo here saying, Brad talked about this. The $10 million was all of it. Ripple is all good per Brad, but alas, we are still waiting for that official announcement. Now, 801 Crypto also brought this up because this is where it got murky for, I think, some people in the XRP community, so just wanted to clear this up. If Ripple was affected by the Silicon Valley Bank collapse, they would have addressed it by now. Rippling, which is a different company altogether. Rippling, the payroll company, was affected by the SVB failure, probably where people were confused about Ripple and SVB. However, the ripple effect this will have on the industry will be major in my opinion. Let's see what Ripple says when they release their statement. And guys, I'm waiting on this statement, but just to confirm here from yesterday, March the 10th, SVB contagion reaches clients of payroll firm Rippling. Rippling, guys, not Ripple. So again, if you got confused, this was probably why. And a major indicator of Silicon Valley Bank contagion spreading, crypto clients of payroll processing Rippling could not pay their employees on Friday. Rippling, in an email sent to clients late Friday afternoon that was obtained by Blockworks, said the company learned of SVB's solvency challenges on Thursday afternoon. Rippling, one of the top options for crypto companies to compensate their employees, according to industry participants, has historically relied on SVB rails for our payroll and other products. And so Parker Conrad here from Rippling, he says, we at Rippling discovered yesterday that Silicon Valley Bank had unexpected solvency challenges. Just now we learned that the FDIC has stepped in and effectively shut down SVB. So two different companies, Rippling and Ripple, obviously two different companies. And I could see where, some in the XRP community would have been confused. But, we got to clear this up when we can. So wanted to thank 801_XRP for posting that. Also, Bill Morgan, Joel Katz, everybody who has contributed. Another interesting observation here from Mr. Hubert, trying to keep it light here. I remember when he called to cash out the very top of the bull run yesterday before the crash, he tweeted this one. Am I alone if I consider these coincidences odd rather than random? Now, you remember when David Schwartz did tweet this out? I found out that I'm going to need surgery tomorrow. The procedure should take less than an hour. I will stay conscious. I will probably be sore for a day or so and should fully heal in about 2 weeks. Anyone want to guess the procedure? And there were some responses here like he just had his wisdom teeth removed. Mr. Hubert saying, yeah, a thing many CTOs like to tweet about in a cryptic way. And then John1140 here on Twitter, of course, decided to go there. I'm sure you don't do Riddler stuff, but it's fascinating nonetheless. Retweeting out a screen grab of this exchange here with Albus on Twitter. Which wisdom tooth was removed? That's quite a strange question, asks David Schwartz. But if you must know, first, the upper right. First, the upper right? Things that make you go, Now I know that's not a wisdom tooth, it's an eye tooth. However, still an interesting observation, nevertheless. And David Schwartz does have an uncanny knack of predicting market moves. Some think he's an oracle. If you guys didn't catch the video I did when he did call the market top for XRP back in April of 2021, before the downturn, that was mind-blowing. I'll link that video up here in the top right-hand corner for you. But here's the thing, guys, coming back to the story at hand. If this does affect the banking sector more seriously, like, for example, bringing us back to this tweet here from Wall Street Silver, we have seen a lot of banks lose value over this period of time. We've also seen a segment of the crypto sector taking a hit, namely USDC, one of the most prominent stablecoins on the market. And as XRP hodlers, we're constantly reminded about the asset that we hold, XRP just being one of them. Matthew LANY bringing us some screen grabs from many different big banks, many different organizations, reminding us that this is the way, and we got to always bring ourselves back. Remember, there is a solution at hand. We just have to implement it, and it will be implemented very soon. So even just going back to September of 2017, payment systems, liquidity saving mechanisms in a distributed ledger environment. Guys, this is the main theme from all these central banks and financial organizations. Liquidity management in a multi-currency corridor network. Here's one from Deutsche Bank, preparing for real-time liquidity. And another one, can distributed ledger technology, commonly known as blockchain technology, help financial institutions optimize the liquidity of their Nostro accounts and reduce the significant operational costs associated with reconciliation? And coincidentally, I did a video just yesterday discussing Swift, DLT technology, and the possibility that, the idea of using RippleNet and others was baked in the cake since 2016 and possibly even earlier. If you guys didn't catch that video, I will link it up here in the top right-hand corner. So all this to say, there is a solution. And there are a multitude of DLT platforms, many different coins that could solve for this problem. Matthew LANY here, just hashtagging some of these cryptocurrencies like XRP, XLM, XDC, Quant, HBAR, Ethereum, Algorand, and IOTA, just to name a few. And out of these, I am personally invested in Algorand, HBAR, and XRP. Let's also not forget government has put in regulation back in 2010 for this exact purpose. Be careful where you keep your money. I'm really hoping none of you guys had your money at SVB, Silicon Valley Bank. Listen to this.
Should be accessible when people need to know, but I don't think you have much hope of reaching a public that doesn't have a professional need to know.
I completely agree with that. I almost think you'd scare the public if you put this out. Like, why are they telling me this? Should I be concerned about my bank? Like my insurance company doesn't tell me what they're doing with my assets. They just assume they're going to pay my claim. Right? I think you've got to think of the unintended consequences of taking a public that has more full faith and confidence in the banking system than maybe people in this room do. That we want them to have full faith and confidence in the banking system. They know the FDIC insurance is there. They know it works. They put their money in. They're going to get their money out. So there's a select crowd of people that are in the institutional side. And if they want to understand this, they're going to find a way to understand this. There's a bunch of law firms represented in this room. There's a bunch of people that charge them by the hour a lot of money to explain this all to them. And it's fine. I don't have a problem with that. And they all have huge staffs. But I would be careful about the unintended consequences of starting to blast too much of this out in the general public.
Keeping us plebes in the dark. So regulators close Silicon Valley Bank, the largest failure since the financial crisis. This is coming from Rob Kintz here on Twitter. This is just the beginning, folks. A must watch now, and I will link this in the description if you guys want to share it or if you want to watch it again. Share to raise awareness. What's a bail-in? In 2010, a law was passed to give the government the ability to go into your bank account and seize your money. And guys, this is called a bail-in, and this is what was happening at SVB. And the result, SIVB, here's what the stock looks like today, down a whopping 65%. All this to say, again, guys, keep your cryptocurrency safe, keep your money safe, don't keep too much money in the bank, and diversify. I've talked a little bit about the fact that I'm buying precious metals. I'm keeping a minimal balance in my bank accounts, operational costs to pay my bills, etc. Not keeping huge balances in my account, though. I'm trying to diversify, obviously, cryptocurrency, another hedge. And as per Patrick Riley of Reaper Financial, noticing that USDC is in fact depegging. Due to a potential depegging event, the USDC in the permanent drip fund has been converted to XRP until stability returns. We will update you as the situation evolves. So he's saying he's safeguarding Reaper Financial's funds into a cryptocurrency that is reliable, namely XRP, guys. I guess we're going to see how this plays out. That's just my opinion, but I want to hear what you guys think. Please subscribe to the channel if you haven't already. Like the video if you like the content I'm providing. I always love hearing your comments. See you in the next one, guys.